Financial troubles for several banks have triggered a gut check moment for Wall Street. Stocks opened today on a modest drop, with shares of some mid-size American banks also plummeting. Alexis Christophorous is here with more on that. Alexis, we're now hearing reports that the regional bank First Republic is taking some drastic steps to save itself. What do we know at that point?
Right. We don't know much. There are reports out there. Bloomberg specifically is reporting that First Republic is looking at some strategic options, including possibly selling the bank. This bank came under a lot of pressure because it had the third highest rate of uninsured deposits among U.S. banks, behind those two collapsed banks, Silicon Valley and Signature Bank. It also saw its debt downgraded to junk by two prominent rating agencies. So there was concern here about the health of First Republic. The stock has been decimated, down more than 80% so far this month.
Does this mean the Federal Reserve will have to think twice when it meets next week about interest rates and whether or not they will have another rate hike?
This is a real big dilemma for the Federal Reserve, because they need to really decide between the lesser of two evils. Do they raise interest rates to try to get a handle on inflation, which is still hot at 6%, or do they pause their rate hikes and sort of let things calm down in the banking industry? If it's any indication, today, the European Central Bank actually raised interest rates there by 0.5%, despite the global financial turmoil that we're seeing, and we'll see if the Federal Reserve follows suit next week.
Meanwhile, the global investment bank Credit Suisse is now borrowing $54 billion, up to $54 billion from the Swiss National Bank. What's happening there? Big
Story, and again, I think it shows that what's happening here with the bank seems to be spilling now over into Europe. I do want to point out Credit Suisse is sort of its own unique issue. It's been a problem child in the banking industry for years now. Lots of scandals, profit losses, bad decisions by CEOs over the years. So Credit Suisse's problems were not exactly what was happening to Silicon Valley and Signature, though they have been experiencing a huge amount of withdrawals from the bank, and there was concern there they wouldn't have enough to make good. So they've got this sort of lifeline, if you will, from the Swiss National Bank in the form of $54 billion US. Credit Suisse's CEO has come out and said, though, we have enough liquidity, we have enough money to keep operating.
All right. Alexis Christophorous, thank you.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.